After a steep sell-off, Ambac Financial Group Inc. is back on everyone's radar, but that drop may have reset expectations and created an attractive risk-reward setup. Ambac Financial Group, AMBC, has been reshaping itself from a legacy financial guarantee insurer toward a diversified specialty insurance and program management platform. Today, the company operates Serata and other specialty units focused on property and AMP, casualty reinsurance, program administration, and niche capacity solutions. Revenue drivers now include P&AMP, C, premium production, program administration fees and growth coming from recent acquisitions and strategic partnerships. The firm's mission is to build a scaled specialty insurance franchise while reducing legacy balance sheet complexity. 1. Legacy business sale completed to Oaktree, de-risking and liquidity. Ambac has completed the sale of its legacy financial guarantee businesses to funds managed by Oaktree, a transaction widely reported at roughly $420 million. That deal materially advances the company's stated plan to simplify the balance sheet and focus capital on growth businesses. A clear step toward cleaner financials and greater optionality for shareholders. 2. Strategic M&A, to diversify revenue. Ambac is actively deploying capital into better growing, fee-oriented lines. 2 recent deals stand out. The acquisition of ArmadaCare, a leading supplemental health program manager, reported at about $250 million, and the earlier purchase of Beat Capital Partners, a specialty MGA InsurTech platform. Each deal adds recurring premium streams, distribution relationships, and product diversification beyond legacy guarantees, strengthening the company's growth runway. 3. Business momentum and insider confidence. Ambac reported meaningful premium production gains in its P&AMP segment, a noted 110% increase in Q2 total P&AMP. C. Premium production in recent coverage. Executives have also shown alignment with the plan. Filings and press items list new executive employment agreements and insider purchases by senior management, signaling management's confidence in the turnaround and future cash generation. Industry tailwinds, specialty insurance and program business remain areas where disciplined capital and distribution win over time. Ambac's moves into supplemental health, ArmadaCare, and specialty lines, Beat Capital, Serata capacity, position it to capture higher growth, higher margin niches versus the legacy guarantee business. Catalysts to watch that could turn sentiment. Closing and integration updates on ArmadaCare and Beat Capital. Published premium and fee growth in upcoming quarters. Conference or earnings commentary where management outlines remnant uses of proceeds from the Oaktree sale and how capital will be redeployed. And any updates on distribution or long-term capacity partnerships tied to those acquisitions. For example, SiriusPoint's long-term capacity arrangements tied to ArmadaCare. As execution shows up in quarterlies and in call commentary, market sentiment can recover quickly from a short, technically driven sell-off. Why this could matter over the longer term? AMBC is no longer just a legacy guarantor. It's consciously pivoting to a portfolio of specialty businesses that produce premiums, fees, and capacity relationships. The completed $420 million legacy sale materially reduces legacy complexity and frees management to invest in growth assets like ArmadaCare, Health Program Manager, and Beat Capital, MGA capability. Those moves can lift top-line growth and diversify earnings, while management insider buys and new employment agreements suggest alignment and continuity at the leadership level. Measured optimism. If Ambac delivers steady premium growth, shows stable margin trends in its specialty operations, and effectively integrates new acquisitions, improving cash flow and a simpler balance sheet could draw back investors who sold during an earnings-related drop. That combination, de-risking plus targeted growth, is the classic setup where a beaten-down stock can begin to re-rate as execution becomes visible. The recent sell-off created a clearer risk-reward window, not a guarantee, but a setup worth watching. If you're building a watch list, prioritize execution milestones over headline noise. Hit like if you found this breakdown helpful, subscribe for more recovery setup deep dives, and drop a comment. Which AMBC milestone are you watching most closely? ArmadaCare integration, legacy sale proceeds, or quarter-to-quarter premium growth? This video is for informational and educational purposes only and should not be considered financial advice. Always do your own research before investing.